to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Japanese index, whether you look at the Nikkei, whether you're looking at the ASX 200, all are managing to hold on to gains of more than 1% in today's trading session.
It'll come down substantially, but it won't be zero. None whatsoever. Never did. The press runs away with things. No, I have no intention of firing him.
India would, of course, be working with some of its closest allies to map out the information necessary to zero in on the perpetrators.
The upside level, of course, remains the same. It's a 61.8% retracement to the full fall, 24,546.
Yesterday, we came off the high point of the day. So I'd like to see the Nifty, get past that resistance level of around 24,350 or thereabouts.
0.6% on the Nifty, 0.4% on the Nifty Bank.
Because I figured that for long-term investment, who's buying and who's selling is really the most useless piece of information.
Direction is very clear that how can we make the credit available on ground without much of cost.
And it's the banking stocks that led the index higher and now are leading the breather as well. The DGCA has appealed to airlines to increase the number of flights to Srinagar.
Significant buying emerging from the lower levels. We did see a sell-off in the morning, but that's been quickly bought into.
Good afternoon, hello and welcome. You are with us on Closing Bell. We are coming to you, of course, from the CNBC-TV18 Motilal Oswal studios. And it's been a good day. I'm Surabhi Upadhyay and Nigel with me right here in the studios this afternoon. Rima will join in just a bit. But why do I say it's a good day? Because after being quiet for most part of the session, now the market is picking up some momentum. It's seeing some buying, and this is despite the fact that banks are still negative. The Bank Nifty is still down, but other parts of the market, IT was always leading, but now other stocks are also seeing some buying. So look at that Nifty chart. It's looking very smart indeed at this point in time. That's IT. Let's get back to the Nifty chart. That recovery is looking very smart. Hi, Nigel. What do you think? We'll perhaps see higher levels before we close next 1 hour?
Well, since the IPL fever is underway, the way I'll term this is there was a batsman that was in top form. And today that batsman decided, well, I'll just hold one end up, which is the Nifty Bank. That's not doing much. But the one that was out of form said, let me hit my way out of form. And in fact, that's the IT index. Just take a look at the way those stocks are gaining. And we made this point, right, earlier today, that if I have to track one sector for today, it'll be the tech index, which is what I said in the morning chat. Nasdaq bounced back overnight. HCL Tech wasn't too bad. You don't want negatives, right? These stocks have pulled back so much. So any kind of in-line to mildly positive guidance, well, the street likes it. HCL Tech up close to around 8%. And the mid-cap names, whether you look at Persistence or the other names, all of them are rallying. And solid rallies is what we're seeing on very large volume. So you like the look of the screen, Surabhi. The Nifty Bank, I think that 56,000 odd mark, that's the next level that you'll want to track. If the Nifty Bank can get past that, that's what starts the next leg of the rally for the Nifty Bank. For the time being, the other heavyweights are doing the heavy lifting.
Absolutely. And some of these mid-cap IT plays are looking so smart now. KPIT Tech, 5.5%. Coforge is up 6%. Persistent, like we've been telling you, 5.5% as well. Anything, Nugent Software, smaller names, 6-7% up on mid-cap IT stocks as well. And those, of course, are large caps, having an excellent afternoon. But beyond IT, just to talk about the mid-cap market overall, look at the mid-cap index. Now let's pull up the mid-cap index, because there was a small point in time in the first half when the index had turned negative. Yeah, that's what I'm talking about, around 11:30 or so. And since then, the recovery has been absolutely dreamlike. So what's fueling it? A lot of independent sort of individual stocks. We'll talk about many of them. Wari, of course, is one of the stocks of the day. 14-15% on the higher side. We've named, of course, mid-cap IT already, which is up and about. But AU Small Finance Bank, for instance, on the results looking pretty good. Aurobindo, because of a US FDA clearance coming through. So earnings, individual news flow, enough to keep the market excited this afternoon.
Well, that's right. And Surbhi, though the broader markets is looking like it's even Stevens, but a lot of stocks that actually got slammed, they are pulling back. Just to pull out a few, we have DCX Systems. The stock had fallen, I think, from around 400 rupees all the way to around 200 rupees in that correction. They'd raised QIP money as well in excess, I think, of around 270 rupees. And now that stock in the last few trading sessions, the last 1 month, it's up close to around 20%. Just pulling it up because the kind of volume spike we've seen on that name as well at the high point of the day. Well, let's get in Mitesh Thakkar on the show. Mitesh, it's a good trading session. You buy the dip, you make money. What would you do right now? The Nifty Bank, I think, we're making this point yesterday as well. It went to 55,900. Today as well, it went closer to the 56,000 odd mark. There seems to be some resistance at those levels. How do you read it?
Yeah. So I think, what you're saying is correct. The Nifty Bank has hit all-time highs and extremely overbought because I think, as you were rightly pointing out, it was batting on the front foot. It was leading and it was really outperforming the Nifty index. So I think next couple of days you might see Nifty Bank slightly subdued and the performances, gets back to normal levels and the Nifty would do well. But in both the indices, the trend is on the upside. And both the indices, in fact, Nifty Bank is slightly more on the overbought side in the hourly and hourly chart. So you might see a couple of days of, these activities when you get those intraday dips to buy into. But overall, I think this market remains positively biased and therefore buy on declines is what I would suggest. On the stock side, it's the Nifty Healthcare and Pharma Index, which is looking good. So I have a buy on Lupin. I need to see the stock get past 2100. I think it made a high of 2104. So buy about 2100 here. Keep the stop at 2070. Look for targets of 2180. And the other one which I like is Torrent Pharma. Slightly, not the most of the liquid stocks in the F&O segment, but I think the stock pattern is quite positive. So buy here the stop at about 3275 for targets of 400 plus.
Okay, all right. Mitesh, I wanted to ask you about Axis Bank. That's the one that comes out with a set of numbers tomorrow, I think. The stock pulled back a little bit, but from the lows, it's seen a bit of a bounce. Need to note that the stock is trading above all technical averages. What do you make of it at around this 1210 odd mark?
See, Axis Bank, is something which has slightly underperformed if you look at the charts of Axis Bank versus Kotak Bank, HDFC Bank, or even ICICI Bank. But the overall setup is and the structure is positive. Again, the stock has seen a rally from 1040 to about 1240. If you get an entry around 1170, 1160 zones, I think I would be an aggressive buyer over there. Keep a stop below 1135, and I think the stock should get past 1220 and head towards levels of around 1275.
Okay, all right, got that. Mitesh, thanks very much. Mitesh, just before we let you go, specifically on this huge IT surge that we are seeing, right? Large cap, mid cap, anything with IT is simply going on an uptrend today. Would you buy into this strength? Any trades specifically on maybe some of the mid cap names as well?
Disclaimer: we have some positions in IT, which is Tech Mahindra and Warsaw. And I think the entire IT pack looks like, if not starting a very strong uptrend, it's at least starting a move which is counter-trend to the big decline which the IT stocks have gone through. I have had buy calls on OFSS and other stocks as well. So I think the structure in the short term is positive. Next few days, few weeks, IT will do well.
Okay. All right. Got it, Mitesh. Thank you very much for that. We'll come back to you with some more questions in a bit. We have Prakash Diwan joining us on the show this afternoon. Prakash, great to have you on as always. So IT, I think trading in and out of IT stocks is almost like one of your Goa casinos, right? You have to guess first what the tweet will be, whether it's Scott Bessent or whether it's Donald Trump, and then you decide your positioning. But anyway, the momentum seems to be coming back. What would your sense be? What would you do? Buying anything?
Good afternoon, Surbhi. So I don't know whether, this is like very similar to the casino allegory that you had. But one thing is for sure, that the volatility in the market is giving ample opportunities in beaten down sectors or stocks, and the kind of revival that we've seen has been fairly sharp and rewarding. The news flow is responsible for it, whereas I don't think the numbers have given any kind of conviction that things will start looking up. It's just that, this expectation of the stress between US and China on the trade side getting a bit, mitigated. is probably giving some sort of a hope. But I think we are celebrating it a bit too early. There's nothing concrete yet on the table. It's just an intent that's been kind of articulated by certain quarters of the US administration. And on the basis of that, there's this hope that's coming through. And, what happened to banks is probably happening to IT. They were under-owned. There's some of them have very good dividend yields attached to it. So, there's a lot of money that's finding its way in these beaten down names. But I haven't seen anything which gives you the conviction that fundamentally there is a change in their revenue or growth trajectory. So let's wait for that. Not buying anything as yet for sure. And if you want to participate in momentum, then of course you'll have to use more technical know-how and factors, not just fundamentals in this case.
Okay, all right, got that, Prakash. Well, let's focus on Lupin. It's trading higher. The company is set to launch a generic drug in the US market. Vinny's on top of this. She joins in to explain the news and its impact. Vinny?
Hi Nigel, good afternoon. So yes, what we're expecting from Lupin is today overnight in 23rd April in US timeline. Lupin is expected to get an approval that is coming in from US FDA on 23rd of April because the exclusivity of Otsuka, which is the innovator of the drug that is called Jynarque, is going to be happening tonight and today. So that is what we're keeping an eye out on. And with this, what will happen? Lupin will get an approval that comes in from the US FDA for the generic version of this drug, that is Tolvaptan, I beg your pardon, Tolvaptan. So this generic drug is what they will be expected to launch in the next few days. That's the announcement that analysts are expecting. So approval coming, and then there is an announcement that is expected for the launch as well. That could be likely soon coming in for the company. Now, once this launch happens, it's going to be a 180-day exclusivity which Lupin will get. So that is a benefit that they have over there versus other generic players. Other than that, FY26 analysts are anticipating a revenue opportunity of around $150 to $200 million. And this drug could contribute almost 25% plus for Lupin in FY26. So very big opportunity that comes in for Lupin after this approval. And do not forget, there's a tentative approval which they're already received somewhere around in October 2023. And launch now is something that everyone is keeping an eye out on after this final approval. And that is why Lupin will be a key focus area today, today as well as in tomorrow's trading session.
Got it. Okay, all right. Thanks a lot for that, Vinny. Prakash, another one. We don't know what Trump's going to announce tonight, but Lupin is clearly a stock in focus, as Vinny explained to us. Your view on the counter?
No, so it's quite positive for two reasons, Nigel. One is the entire pharma pack seems to have been experiencing some sort of a lid that's been capped on it, given this overhang on what potentially could come through. But remember, the way the US FDA has gone about in the last year and a half in terms of according approvals for important, very critical drugs that the US consumes. And then that includes a lot of these generics which have been going off patent. And there's a lot of rotation that's happening. So in the case of Lupin also, as you saw, the window shuts on one and the door opens to the other. So there's always a rotation that you see. But remember what happened to a company like Natco. And if something was against your expectations and against your favor, it drastically kind of impacts what you could gain in terms of revenues. Lupin is out of the woods for sure. We've seen it move from the 700 zones to 2,000 plus in the last, let's say, 18 months or so. It's done so well. I think it's at a far more better spot than what it used to be. And I would still back it up in terms of organic growth leading the way. And this 25-30% kind of revenue growth in the next 12-18 months could possibly happen because these are high margin businesses, products that they could benefit from. So quite positive on the space. But as I said last time, it's just a matter of a couple of days. You'll be getting some clarity. It's better to buy into these things with some clarity rather than get beaten down if something goes wrong and then kind of hope that it gets corrected. So that's my call on pharma. But otherwise, quite positive that things will probably look up even for this space. It's not participated in this recovery in the last 45 days. You'll probably see that happen once the tariff issue is out of the way.
Prakash, hi, afternoon. You had a look at Ather's RHP. It will be the second pure play EV maker to get listed on Dalal Street. But investors sort of have burned their fingers in the ecosystem, whether it's with Blue Smart and the mess there, or Ola Electric, which is now down 67% from its 52-week high. Had a look at Ather, and what could be the what's the advice? Should one be looking at subscribing to this issue?
So, Rima, I would first and foremost be very clear that I would not compare it with Ola for two reasons. Ather has been into the market much earlier. They've been moving up the learning curve in a much more decisive, definitive way than what Ola did. Ola seemed to be in a hurry to come into the market, to kind of start launching and expanding. Ather's the product lines, and I've tried that out, is far more superior. It's priced differently in a band which is not meant for let's say the mass commute kind of a market. And the technology that they've kind of evolved, and they've rapidly changed their models also. They just have a couple of models that they actually sell, but then those have evolved in a very significant way, very superior way. My sense is, and Blue Smart was a different issue. It was more of the application of EVs in the public transportation side is a very complex business. It's going to be extremely difficult for people to make money given the dynamics. But owning a two-wheeler will continue to be making sense for a lot of Indians. And as the charging infrastructure becomes much more democratized, I don't see any reason why superior EV two-wheelers will do well. So will not do well. So from that perspective, if you look at this whole thing, and it's a fairly large float, this is probably an IPO where you could apply, subscribe to it, you'll get allotments, and you'll do well also organically the next couple of years. So I definitely like it. It's absolutely not to be seen in the same vein as Ola. That was a very different story, and I was very clear that I would not put money into the Ola IPO. But this is definitely high quality, and it comes with a lot of proven track record as compared to what you have available in other ways. I mean, it's probably the only tested, tried EV two-wheeler play that you'll probably be able to buy. So there will be a lot of money that will come in. I don't know about how it performs post-IPO and just for the listing pop that people would want. But this is not an environment for listing pops to be sought. I would believe if you want to buy and hold on to it for a longer period of time, it makes the cut.
Okay. All right. So don't paint it with the same brush as the Ola experience. Look at the fundamentals and then decide. And Prakash seems to have a favorable view on it, on Ather, that is. Prakash, just give us a second. I want to talk about Havells, actually. Let's pull up the stock. Havells has been sulking all day. It opened down. It's still down about 3% lower. And this despite the fact that if you look at it on the face of it, those numbers look really good. Top line growth 20%. Their margins did not fall. They were expected to dip, but they only fell about some 10 basis points or so. And the cable and wires division and Lloyds as well, all those divisions have done really well, but the stock is still down. We caught up with the management to get their sense on the business trajectory. Let's listen in and then ask Prakash what he thinks of Havells.
I would say, you talked about the newer competition coming in. This industry is a very large part of the electrical industry, and I think it is still has fairly a good share of the unorganized and the non-branded sector. So newer brands, better quality brands, hopefully should actually consolidate market shares from the unorganized sector. So overall, I think it might not be a bad thing for the industry. I think this was one quarter where we actually saw growth coming back in the rural and semi-urban sector as well. The urban had been doing better in the first half of the year. The rural was impacted. It's coming back. Maybe some impact of the budget changes as well as the RBI relaxations. Hopefully that should augur well for the coming times. I think if we see overall, there is a movement more towards the premium, and maybe that is also a strategy of the company. But that is there we see a movement more towards the premium products as well. If you take fans, it is more towards energy saving products. If you take switchgear segment, it is more towards automation and electronics. So there is a movement towards premium segment overall.
So no problems with respect to demand, not too worried about competition. That's the takeaway from Havells. Prakash, what do you think is affecting the stock? Is it valuations? Is it the slight pullback that we've seen? And what would your advice be on it?
No, so, first and foremost, remember, the entire re-rating of this sector, given the new entrants and some of the large heavyweights throwing their towel in the ring in terms of wanting to expand the cables and wires business. This is definitely competitive intensity at its best. The second thing that's likely to happen is that all these, what the market is more worried about, apart from the fact that everything else seemed nice. In fact, Lloyd's, which was a little bit of a issue, is seemingly digested and completely sorted. So, there's no more any impairment that would come through and, which would hit you with a surprise. And things look much better on the balance sheet as well. But what's probably worrying the market, in my view, is the fact that there could be a lot of dumping that some of these appliances and some of these FMEG, as they're called, could be faced. And Havells has invested a lot into brand building, distribution, and all of that. So if that were to happen, if China finds its way to kind of get these things into the market, and we yet don't have too much of ring fencing on anti-dumping duty and all of those types yet in this space, you could be facing some sort of a growth issue here. Though the market is growing, consumption is growing, you may not have market share growth for some of these larger players, and then the ROIC and ROCs start kind of getting to be a bit diluted. So that's the concern. But otherwise, I think the numbers tell you a very different story. Things have been good in the last quarter, which was otherwise not expected. But even post-festival season, they've managed to do it. And things could kind of normalize. But you'll have to live with that uncertainty or that risk of China dumping some of these goods into the Indian market, flooding the Indian market, for all you know, with low price points, and which start kind of becoming difficult to counter. So that's where the concern is. But otherwise, I don't see so much issue. The recommendation is to wait, of course, not to buy into it just because it's down 20% today or whatever. But not 20%, sorry, it's down 3-4% today. But it's something which you'll have to assess only after the impact of tariffs is digested and felt in the market.
Okay, all right. Prakash, thanks a lot for stopping by, filling us in with your take on a lot of those counters. For the time being, we take a small break, come back. Rajesh Bhatia of ITI AMC is waiting for us on the other side.
Welcome back. You're with us on Closing Bell, and the market has managed to find some, buzz, interest, momentum, call it what you want, because the Nifty is looking much, much better now versus that intraday dip, the early morning dip that we had. Rajesh Bhatia is our next guest on the show. He is CIO at ITI AMC. Rajesh, always a pleasure to have you on. So it's been a rocket, right? I mean, a couple of months of consolidation and then all gloom and doom thanks to Mr. Trump. But once the recovery happened, it's just been a one-way up move. What do you expect ahead? I mean, do you expect more momentum, or do you think at some point we'll consolidate?
Yeah, so it'll be volatile times, isn't it? But, here's what I think has happened. One, I think the world has decided to move out of dollar assets. The world is moving out of US equities and fixed income. And you can see the pressure on the dollar as well. Now they're finding a home for all of this money that is kind of moving away from the United States. In their wisdom, the markets have decided India is a fairly good place to park that money, right? India has very good macros. We don't have a current account challenge. Capital account, well, the money from the foreigners is certainly helping. We have a very disciplined fiscal deficit. We have brought it down very responsibly from 9% post-COVID to 4.4% now. So again, that's a very stable macro, and that makes us our fragility much, much lower. The world thinks that India will definitely benefit from a bilateral trade agreement. A lot of the Asia, Far East Asia, will get clubbed with China as far as negotiations with Mr. Trump is concerned. So stable macro, good bilateral trade agreement, all of that means money finding exits from dollar to Indian assets. So FIs have really been kind of charging in and putting and deploying that money. For the moment, anyway, our local money, I know that from April, at least the mutual funds also have gotten inflows, which are strong. So from the supply side or demand side of equity, that equation holds very, very good. Now, what it does is the liquidity comes into the system. And of course, the first thing it helps is banks, because it'll help your deposit rate, it'll help your lending growth rate, because liquidity gets into the system. Clearly, banks have been a mark outperformer. And in fact, if you look at telecom and banking, if you take that away, a lot of the other sectors are still bleeding quite heavily, whether it is media, metals, IT, real estate, consumer, they're probably down anywhere between 12 to 25%. So it's only banking and telecom which are probably hitting new highs. And that is really what I think has happened.
Hi, Rajesh. Good afternoon. Good to see you, Ben. Let's talk about one of the sectors of the day. I don't know, what's your take on the renewable space? That space got a lot of interest. Then suddenly it was shunned away. Stocks fell, 30, 40, 50% as well. But a couple of them, like Vari Energies, the last few trading sessions, it's moved swiftly from 2,000 to 3,000 rupees. We need to keep in mind as well that the lock-in will open in the next 2 days, for those that were stuck in that 6-month lock-in. So we'll have to see how the price behaves after that. But for the time being, when they are guiding for EBITDA growth of close to 60% in the next year in comparison to this year, what do you think of the space? Some say that maybe the sun is still not, set on some of these solar companies. How are you all placed?
No, unfortunately, at least as far as I am concerned as a fund manager, I'm not playing these opportunities. On the power side, I'm more focused on the utilities business. So unfortunately, I don't have a very strong view on where this is. Of course, I can just give you some numbers. Globally, the demand for solar is about 500 gigawatt. The capacity with China alone is 1,000 plus gigawatt, which is going to go to 1,800 gigawatt. So let me put that in context again. The global demand for solar is 500 gigawatt. China alone will have a capacity of 1,800 gigawatt. So, but having said that, I don't have a strong view on the companies that you just mentioned.
What's played out for some of these companies is that yesterday there was those duties that the US has imposed on a lot of other countries. So the street believes that it could be a potential beneficiary could be India. We'll have to see how that plays out. And then Vari obviously delivered a good set of numbers. Let's keep that aside.
Nigel, in that context, I would say the electronic manufacturing services is a much better, at least as far as I'm concerned, is a better play for that China plus one story.
The EMS plays, right? In fact, we had the management this morning of Cyan DLM, and I asked them that What's the reaction to Trump's tariffs? Are the customers taking a lot of time, or is the phone ringing non-stop because a lot of those customers want to know who's the other alternate besides China? Let's see how that plays out. But you like that theme, so that's good to hear. Let's focus on tech as well. That's got slammed, right? Another sector of the day. HCL Tech, they gave a fairly decent guidance. A couple of sell-side notes believe that maybe they're going to find it difficult to achieve that. We'll see how that goes. But the stock is up close to 7%. The Nasdaq was up overnight. And some of these stocks have come to those valuations we've seen, say, on a 10-year average. Your take, good quality companies, some uncertainty in the near term. The problem is there may not be too much growth, at least for this fiscal.
So my sense is that, this is a sector which has been really slammed. As you point out, now the large cap companies are quoting at 21 times earnings, 4 to 5% dividend yield. That's really, really juicy as far as these companies are concerned, because these are not very cyclical companies and they have very, very high free cash flow. So given that context, the valuations certainly appear quite attractive. Having said that, they have got slammed because there is really concern that US is going into some kind of a recession, if not a deep recession. So earnings are getting cut in the S&P, as you speak. And therefore, this sector has been really the sector which has borne the brunt. What has helped today is, apart from the results, I think it's more a macro play. The fact that the President of the United States has said that they will not bother with the Fed, etc., which would have been a very drastic, or I would say a suicidal move, has certainly helped sentiment. Dow has gone up, and that has also helped some of that rub off on the IT stocks in India. But I think as you move forward, it is still dependent on, so it's a good tactical trade. We don't know what the eventual outcome on the United States is. If there is a deep recession, eventually, then my sense is that these stocks will not necessarily do as well. But for the moment, my sense is, given what the change that the Scott Bessent and Trump has suggested, that these tariffs with China will not last long and they will not fire the Fed, etc., certainly has helped the momentum.
Rajesh, you spoke about how telecom is hitting fresh highs. The kind of rally that we've seen in Bharti Airtel, 40%, CAGR over the last 3 years. It's quite incredible, especially when you juxtapose it with what, say, Reliance Industries is doing. Reliance Industries is languishing. So explain to us, are some of these telecom stocks pricing in a blue sky kind of a scenario, or is there more upside to go after this kind of an up move in the large cap names?
So I don't know too many industries where you get such an oligopolistic structure, which is also a B2C business. There is an oligopolistic structure, which is two-player market in airlines, but airlines is a very cyclical business. Here is a oligopolistic structure where it's a B2C business and less cyclical. And I think the industry has been guiding that the 120 rupee ARPU will move to 200, then eventually move to 300. They have passed that journey from 120 seamlessly, right, to 200 rupees or plus ARPU. That incremental 200 to 300 rupee ARPU journey is yet to be made. And by the way, this is a very high operating and financial leverage business. 60 to 70% of the top line growth falls to the bottom line. And the 5G capital expenditure is also done. And I would say, if you're a premium player with sticky customers, that certainly helps. So my sense is, even as you move forward, the ARPU journey has yet to kind of happen. And like I said, it's a very high operating and financial leverage business, which means a lot of the top line growth will fall to the bottom line. So the story is still kind of intact as you move forward.
Okay. All right. Rajesh, we'll leave it on that note for today. Thank you very much for joining in. Great getting that perspective from you. Well, as we take a quick break, let's just quickly revisit the biggest and, of course, a very, very tragic national story that we are following. At least 26 civilians, including 2 foreigners, have been killed in a terror attack in Pahalgam in Jammu and Kashmir last evening. The Pakistan-based Resistance Front has claimed responsibility for this attack, which was the deadliest in the region since the 2019 Pulwama attacks. Following these attacks, Prime Minister Modi cut short his visit to Saudi Arabia to come back to India. The Cabinet Committee on Security is all set to meet this evening to decide on the next course of action. Meanwhile, Home Minister Amit Shah reached Srinagar after the attacks to take stock of the situation and paid respect to those who lost their lives. He also visited the site of the terror attack earlier today. Ishan Vani gets us more from Pahalgam.
This is the route to Baisaran, and this is actually no route at all. It's muddy, there are big boulders, and it's difficult to even walk on these. Even if I wore a normal shoes, it would be impossible to come here. It's muddy, look at the water that's flowing, and this is how difficult it would have been to bring down any injured or any survivors or those who were there at that time. You know, possibly the cells dropped by one of those tourists who came here. There are water bottles, there are shoes everywhere. Wherever you look, they have ran into panic because there were massive firing that took place, not less than a massacre. Whoever came in their way, they shot and killed them. Where is the road? Imagine how difficult for at least 3-4 kilometers they went up and down to go to that place. And beauty of this place might mesmerize you, but yesterday's visuals are scary. Scariest to understand that what happened here. Generally, tourists take pony and come here for leisure, but everywhere you look, there are marks and signs of the disaster that happened yesterday, and something which was unexpected. Look how I have to walk through these steep and jump into certain places. There were rains that have further dampened the condition of this particular route. It's a trek generally taken by several tourists. They use ponies, as I said. It might be beautiful, but scariest of scenes were witnessed yesterday here on this difficult terrain to reach where the carnage took place yesterday, where 26 tourists were killed and more than a dozen injured when they opened indiscriminate fire at them. With Bashir Lone in Baisaran, Nishanwani for CNN News 18.
Well, that is the unfortunate and tragic news that's coming out. We need to slip into a break on that note. On the other side, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter. We'll also get you a few BTST calls.
Well, a bit of a surge is what we're seeing again in the last few minutes, and the Nifty now is moving back towards the high point of the day, the 24,350 mark. That's a bit of a resistance zone, but a couple of stocks actually have seen a good recovery. You have Ultratech, that's recovered from the low point of the day. ONGC as well, saw a sharp correction earlier when crude oil prices went down, but that's fighting back as we speak. And I think, Nestle as well has now moved to the high point of the day. So keep an eye out on a few of these names. But it's around 3 p.m. and before market closes, let's go across to Nimesh to tell us how is he reading today's market action. Nimesh, what are the flows like?
Hi, Nigel. Before the flows, a very impressive intraday recovery from the day's low. Largely, it's led by technology, but from a flow perspective, there was a selling in the first half that got absorbed, and now we have an MOC basket buying as well at a leading FI desk. The MOC flows are typically been executed in the last 30 minutes of trade. So maybe that explains that after 3 p.m. we're seeing a bit of a surge in many stocks in today's trade. So that's from a flow perspective. As I said, there is clear shift in today's trade, at least flows from banking to IT. So that's playing out. The IT index is up for more than 4%. A lot of individual stocks have gained between 3 to 8%, 10% as well. So clearly IT is a flavor of the day. But beyond IT, in a couple of sectors which deserves mention. One is real estate, and second is the export-oriented, export-facing stocks. Those are the ones who are seeing a bit of buying interest back. Remember, these stocks have underperformed in the recent past, and now you're seeing a bit of interest back from larger institutions. So clearly flows are shifting there, but I guess the big sectoral shift seems to be from banks to IT in today's market.
Got that. You can see that in the price action. The Nifty IT index is now up 1,500 points. Nimesh, what about individual stocks?
So in terms of individual names, the first stock on my list is Dixon Technologies. You've seen a bit of an up move in that stock in the last few days. But here at these levels, some bit of profit booking has crept in. I understand some domestic mutual funds and a leading AIF seems to be booking profit at these levels in Dixon Technologies. So that's the first stock. The second stock is ONGC. Again, a bit of an anti-consensus buy, so to speak. But I understand a leading family office and some large HNIs have been aggressively buying into ONGC in the last few days. So that's the second name. Third, couple of stocks where there is delivery-based buying, Adani Ports and Jio Finance. Both are seeing delivery-based buying today, so expect high delivery volumes. And for Jio Finance, I understand yesterday there was a large volumes. I guess there was a clean-out trade as well. And after that, you're seeing an up move in Jio Finance as well. So that's a couple of stocks. Last, where there is a bit of delivery-based selling in today's market, Yes Bank and Canara Bank. Canara Bank actually moved yesterday, but today there is delivery-based selling in both Yes Bank and Canara Bank within the banking name. So those stood out for me as far as delivery-based selling is concerned.
Okay. All right. Got it. Nimesh, thank you very much for that. So lots of buzz and chatter as always. By the way, guys, I was just looking at US futures. They're looking super, super strong at this point in time. Let's remember that our pullback and our recovery is in the global context because Asian markets have done very well today. The Hong Kong market is up about 2.5%. Europe is positive. And right now, the futures, S&P futures are up a whole 100 odd points. It's a 2% rally. NASDAQ futures are up 450 points right now. So let's see. Perhaps this is helping sentiment.
I think the market has to react, right, over there to what Mr. Trump said. He's not going to fire Powell.
Correct.
So I think that's
a relief rally.
Yeah, and I think Tesla's, the reaction to Tesla as well will be important. The stock was up, I think, 5-6% in post-market trade. So a couple of positives to look forward to.
Absolutely. That and on China as well. I mean, the fact that he's saying that it can't be 145% and, we have to make a deal, a good
I think that was during market hours. The other two were after market hours.
I think even the Powell comment had happened during which is why there was a bit of a cool off. Overall, there was a a recovery in risk appetite. He's saying he's not going to fire the Fed chief. All right. Well, let's bring Mitesh back in. Mitesh, so the setup is still looking very, very good. Nifty levels and any final trades that you'd advise?
See, on the Nifty, I have maintained that I think, as long as you're not breaking 23,900, 950 zones, we should be good and should be buyers around 24,100 broadly. Give and take 30, 40 points, that kind of a zone. And the important thing here could be the Bank Nifty. I think the Bank Nifty, might go through one more day of consolidation, and then we might see some kind of a pickup or a pullback happening. So if the Bank Nifty can sustain, 50,300 odd levels, then I think that's where the action will happen. On my BTST calls, I had earlier given a couple of tech names. Right now, I have a BTST on Tata LXI. I think, so disclaimer that we have some options position. So there is vested interest over here. But I would suggest a BTST with a stop. I think there's some problem. Just give me a minute. Sorry. We'll take a target of around 5,800 over here. My package is hanging. I think. Give me a minute. I'll come back to you.
Yes, absolutely.
All right, let's, in the meanwhile, talk about Sona BLW because that stock is surging as commentary from Tesla's earnings call suggests that production rates of certain models are ramping back higher. Sudarshan is now here with more.
So today shares of Sona BLW has surged and currently it's up more than 6%, and it's not on the back of something company has announced, but it's on the back of the positive commentary coming in from Tesla. In its earning call, Tesla has announced that the production volume of Model Y is back to normal levels. In December quarter, Model 3 and Model Y, the production volumes had declined more than 16%. And contribution, if you talk about to Tesla's volumes, this Model 3 and Model Y contribute around 95%. And following their Investec has come out with its sales note and it says normalization of Model Y production rate should subside the headwinds that Sona BLW has been facing for the last few months. And remember, company, basically Sona BLW, derives 18 to 20% of its revenue from Tesla. So this positive commentary from from Tesla is helping the stock gain today, and it's currently up more than 6%.
All right, that explains the move on Sona BLW. Interesting one. So thanks very much for that. Let's now also talk about Waaree Energies. That's really been one of the big headlines since the morning. Stock has done very well after posting Q4 numbers. Not just that, Waaree then held a call with analysts as well. Let's go across to Vivek for the latest. Vivek, so what were the takeaways?
Well, absolutely. What the key takeaway is that as far as FY26 is concerned, the company expects EBITDA to be in the range of 5,500 to 6,000 crore, which if you look at the growth over FY25, it implies a doubling of the EBITDA. Looking at the numbers themselves, top line very strong, over 36%, EBITDA more than doubling, margins expanding almost 900 basis points, and profitability higher by 31%. Now, when you're looking at the order book of the company, there's been a moderation on a sequential basis. 50,000 crore is what they were sitting at the end of Q3. Now 25 gigawatt of capacity, or 25 gigawatt is the order book, where the opportunity size is close to 47,000 crore. Remember, Waaree mostly is in the short cycle order business, so you expect most of these orders to be executed over the next year and a half. As far as the other key development that's happened and transpired for solar cell manufacturing, solar module manufacturing companies, is that USA has gone ahead and imposed significant duties, from the range of 6% to as high as 3,500% across 4 Southeast Asian countries. And this, is expected to boost volumes as far as Indian companies are concerned, making them a lot more competitive as far as the very high US market is concerned. Bernstein analyst today told us that USA imports close to 50 gigawatt of solar modules each year.
Okay, all right. Thanks a lot for that, Vivek. Well, that one clearly is moving higher on very, very large volumes. Another one from the frontline stocks that I'll be looking out for is Tata Consumer. Pull up the intraday chart. As we speak now, the stock is at the high point of the day, up 1.5%. So we'll keep an eye out on that one. Tata Consumer should come up for you on the screen. But the other one is SBI Life. That one's going to come out with a set of numbers tomorrow. Yash joins us to tell us what do we expect this time around. Yash.
Well, Nigel, it's quite funny because, the March numbers, monthly numbers were yet to be released, and analysts were making an assumption on those March numbers, and hence for the quarter. The numbers on the top line looked weak, but interestingly, the March numbers came out today. They've made the numbers weaker than what the analysts were anticipating. So now the numbers that we're looking at, of course, a very weak top line growth, that is AP and the new business premium growth. On the new business front, we are expecting a contraction of 24%. The number that we're looking at here is 9,321 crore rupees. On total AP, again, a contraction is expected of about 6%. The number here that we're looking at is 5,022 crore rupees. Retail AP is expected to gain by 8% at 4,801 crore rupees. Value of new business, again, a contraction expected of 8% at 1,384 crore rupees. Margins expected to contract by about 74 basis points at 27.56 versus 28.3%. Qualitatively, what to expect from the quarter? Sluggish growth in APE and VNB. This is because of certain reasons. Slow growth because of the strong base effect which the company is facing. transition away from ULIP products because of market volatility and transition away from the bancassurance channel. Margins could improve sequentially, but decline on a year-on-year basis. Still, the company is expected to have the strongest margin in the industry. What could lead to a re-rating in the stock? One, clarity on bancassurance-related transaction, whether it's over or it continues in FY26. Second, positive surprise on APE or margin front could also lead to a re-rating in the stock.
Thanks a lot for that, Yash. Well, before we talk more about the fundamentals, I think Mitesh has got a pick with us for us. Mitesh, tell us what's on your radar.
So I was talking about Tata LXI. With the list of that we have positions, I think, this can be a BTST with a stop just below levels of 56.20 for a target of 57.50 and maybe even 5800. The stock does look like going through a massive reversal over here. And the other one which I like is Nykaa. I recommended the stock earlier as well, which is quietly making newer highs. The pattern of higher highs and higher low continues. So BTST here with a stop at about 119, 125 and a target of 186 can.
Okay. All right. Got it, Mitesh. Thank you very much for that. You have a good rest of the afternoon. We will see you again with the market tomorrow. Mayuresh Joshi, Head of Equity Research at William O'Neill, is with us. Mayuresh, thanks for joining in. I have to start by talking to you about this mega IT run that we're seeing. I mean, look at all the stocks, even the mid-caps, Coforge, Persistence, etc. And tomorrow, a lot of IT companies are reporting, including Tech Mahindra. There's, I think, Persistent itself is reporting, many others. What have you made of the up and down here? What are you buying in IT, if anything?
Again, I think the season started with the top-tier companies, TCS, Infosys, Wipro, giving a very weak set of numbers and a weak guidance as well, compared to what the street was probably presuming. Obviously, HCL Tech's numbers yesterday has created a lot of enthusiasm among the IT pack. And therefore, I think the large expectations now getting built in is that there is some hope or sanity that will prevail as far as tariffs are concerned. There is also some element of hope that there might be a rate easing cycle in the US if inflation probably stays in control, along with some expectations of a tax cut happening as far as the corporate and the individual world is concerned as well. And that might give an impetus as we head into the second half of this calendar year of order flows coming back, because that is where the entire dispute was, that orders might be sluggish, they might be back-ended, even if orders probably come in. The margins of these orders might be a little bit sticky. The pricing, again, might be a huge issue to comprehend for a large part of the IT pool. And therefore, I think in the past 2 days, with whatever announcements have happened, as far as tariffs are concerned, with tariffs being reduced in terms of expectations on China, negotiations happening with the rest of the globe, along with expectations of discretionary spending coming back for a whole host of these factors, these stocks probably remain in focus. But our take is that the ratings still look very, very soft. The recovery might be back-ended, which means that you might see a genuine recovery happening by the third quarter of this fiscal, where there will be absolute amount of clarity in terms of all these factors put together. Specific stocks like HCL Tech and the large cap names, decent set of numbers, guidance has been decent as well. And if they continue to execute well, I think the momentum can very well continue. Within the mid-cap names, again, I think we are not having any actionable so far, but I think we are having 3 stocks on our radar as far as results are concerned. One is obviously Coforge in terms of how numbers will probably come through. We are watching those numbers very, very carefully. One is Persistent Systems, where the expectation largely is that it should be a stable set of numbers. Some softness expected to come through, but generally the guidance should be relatively better. And Emphasis, where I think the entire generative AI argument in terms of the overall order book pool that Emphasis carries on its books as we speak, might actually be a game changer over the next few quarters as this expands even further with more orders coming their way as far as Gen AI is concerned. But the management is very, very focused on key elements within this segment itself. So no key actionables would be to answer your question, but these 3 stocks within the mid-cap universe is definitely something that we've kept on.
Okay. All right. Mayuresh, stay with us. I want to ask you about a few more names. For the time being, let's slip into a short break. Come back. We'll continue our chat with Mayuresh. Welcome back. Well, today what's encouraging is the broader market gradually came to the party because at one point of time we had more number of stocks that were declining than the number of stocks that were advancing. But that's quickly turned around yet again. And you look at the screen, well, in terms of the Nifty stocks, more green than red. You like it. Well, Mayuresh, I wanted to ask you about two names. Jyoti Structures, this was a stock that saw a sharp correction. And then you had some stronger hands that did come in. The order book has spiked up as well, and they're bracing for better times. I'm just asking you if you track this company because the volumes today are nearly 5 times the average. More than 100 crores of value has changed hands in today's trade. Do you have any view on this one? And the other one I think you could have a view on is VIP Industries, another stock that's been a big underperformer. But in the last half an hour or so, we're seeing a volume spike out there. Any view on these two?
So Nigel, as far as Jyoti is concerned, I think the expectations of a burgeoning order book, and if you probably see the kind of capex spends and trends that are evolving as far as the entire infrastructure space is concerned, whether it's road, railways, highways, port development, as an example, I think Jyoti, Patel Engineering, all these stocks probably come back in focus. But our own sense is that we're a little bit more focused in this area. And therefore, I think in the pre-engineering buildings side, Pennar Industries is something that we probably kept our focus on. The entire market, Nigel, is expected to grow quite significantly over the next few years in terms of the PEV market itself. The segment that they're catering to, the new plant that they're probably opened, the margins at which they're expected to operate. Our own sense is that within infrastructure, I think this is one segment where our take is that earnings should largely go down. So Pennar Industries is something that we're liking. Jyoti, Patel, NCC can come back in focus as the market momentum has.
Mayuresh, just to confirm, the stock you're talking about is Pennar Industries. That's the one you like, right?
Yes.
You would rather prefer that name.
Yes,
Got it.
Yes.
So that's... Yeah, go ahead.
Sorry. And as far as VIP is concerned, obviously, I think it's a proxy to the entire travel and tourism theme. Obviously, entering the best quarter as we speak. And therefore, I think a large part of the underperformance that probably came through for VIP might actually start reversing. So I think if you probably just have a comparison check between VIP, Safari, and what we track on the global scale, Samsonite as well. I think the peers have probably done better in terms of both the product designs, the SKUs, in terms of duffel bags, in terms of the carry-on bags as well. And VIP is probably getting there. So it's been an underperformer, but my own sense is that if it gets his mojo back, I think this underperformance might actually turn into an outperformance as we head into the best season. And travel and tourism, Nigel, is now a year-round theme. There is no specific quarter that probably goes with it.
Yeah, the one we were comparing over there was supposed to be VIP with Safari. Safari has been the big outperformer, as Mayuresh said. But now the hope is that VIP will get its act together. If you compare it on a market cap to sales, well, now in fact, Safari is way ahead, but the performance has been such. Growth has outpaced VIP by a great deal. And also in terms of margins and profitability as well, it's been far better, Surabhi.
Okay, absolutely. By the way, I'm looking at some of the price and volume charts. L&T Finance, Ashok Leyland, interesting moves on these stocks. Up 3-4%, good volumes on both of them. So before we close out, Mayuresh, your thoughts? Ashok Leyland, I mean, this stock hasn't moved in a while because of the obvious CV cycle being in a slump. Do you see any turnaround?
Again, it might go through a sluggish phase. And therefore, I think, Surabhi, our take is that focus on areas which are showing strength. Consumption is expected to come back very, very strongly. And therefore, I think one stock where ratings and rankings are looking extremely strong, where the resilience of earnings might continue, something like a Radico. So our own sense is that the premiumization as far as Radico is concerned might actually continue doing extremely well. The expectation in terms of the super premium products within the premium range is expected to cross 500 crores in FY26. Margins expected to be between 14-14.5%. Net debt should peak off as we speak. And therefore, I think in terms of volume growth, in terms of margins, in terms of the overall bottom line growth as well, EPSRS ratings, I think this stock, in our opinion, at Marcus India looks extremely well poised to probably post reasonable earning as well as good price action as well.
Okay. All right, Mayuresh. Thanks very much for that. Just allow us a couple of minutes. We'll get through the market close and then come back. So a good day is what we're talking about. 151 points higher. The global risk on taking the Indian market along with it. And bulls initially in the morning probably thought they'll take a bit of a breather. But then they said, no, let's join the party. Why not? The only exception is the Bank Nifty. The Bank Nifty is ending with a cut of about 0.5% after its stupendous run. But IT has more than made up for it. Look at the gainers on the IT side. HCL Tech is closing out the day with an 8% rally. Tech Mahindra ahead of numbers 5% higher. Wipro 4%. Infosys 4%. TCS 3%. Strong day. But even beyond IT, today there was a lot of buying in autos. Tata Motors, for instance, Mahindra & Mahindra 3.5% up. Tata Motors closed 4.5% up. Hero Moto, Maruti, Bajaj Auto, all of these stocks looking pretty good. L&T and Bharti were some of the other large cap names that did well. Lever ahead of numbers 1% higher. And even in ICICI Bank, by the end of it, recovered. 0.4% up on ICICI Bank. The only losers actually were HDFC Bank down 2%, Kotak